What's up, fellow traders? So we did it today. We dinked the 200-day pretty much on the Dow and went through it on the S&P. What are we missing? That's right, volume. No volume, buddy. And just like when the market's breaking down through major averages, when you go back and look as we broke through a trend line and we break through an average, the volume swells. As we're breaking up through them, it's not swelling. Nobody's a believer. I'm sure not a believer. I stated a few facts this morning. I don't like to get into the politics too much. I'm more of a technical trader. We can rant and rave about stuff forever. Ain't got time for that. But I do want to point out one other thing I didn't say is, you've all read it, how the federal government's revenue has dropped 40% as they're ramping up spending. We all know as traders, trading companies, when revenue drops, they cut spending, they cut dividends, and they're doing the opposite. Definitely setting up for a major train wreck. We could definitely top out here for 4 weeks all the way through June, and I wouldn't be surprised, because like I said, once we fall from these levels, we're not going to see them probably till after 2010. We'll like fall down into our trading range, if not break new lows. We're at least going to fall down into a trading range between 7,500 and 8,500 on the Dow, and 700 and 800 on the S&P. It's coming. I feel it. And I'm going to grab the camera and show you a couple things right here. This right here, I like to bring this up because it's the 1929 crash. And if you've been following me, before our dip to 6,500, this is what I was looking for, our ramp to 10,000 up to the 200-day. Now the 200 days down at 8,700-ish. But this is what we've had. There's our crash. We had our spike up and our little mild sideways. Nobody's getting their pullback like they're touting. Boom, up to the 200-day. This is where we're at. This is obviously the 1929 chart, but I like to follow it because when we were down here crashing, if you go back to my January posts where I do, where I did a 3-part weekend Dow at 10,000 before 5,000, that's what I was calling for. We hit it. It's there. It's done. Like I said, we're going to have to see gold bricks. No way are we going higher. I like to bring this back because it's good to refresh our memories. And then look at here how we came down, and people could have been touting a double bottom, just like they were touting a recovery right here. It's over. Things are great. They're making new cars, the auto industry, just like right now. Communications, rims, cell phones, the information age. Well, this was the industrial, automotive, toasters and all that stuff. See? And look what happened. So here we are. People were probably touting a double bottom here. We broke through it, came up and dinked it, and now we were fighting the 50-day, see? And I like to slide this. You can all look at it too. But it's just amazing what happened after that. Wham! Look at that. That's amazing. Now, if this was the recovery, see? This is what I'm looking for right here. See? We're not getting that. We're more getting this sideways up light volume here. See that? So even if this is the recovery, we're going to have a 50% pullback. It's the way it happens. You have to do that. what's the word I'm looking for? It's healthy. You have to shake out the weak hands to finish the rally. Right now, like anybody holding on this rally, like every day we get more, they're antsy to sell. They're antsy to sell. You can't get no legs that way. Okay? I just like to bring that up. I like to look at it. I like to refresh my mind with it. So here we are today. This is that trend line where I was drawing it because I liked where it was battling the 50-day. Remember how I was skipping these two top peaks? Well, now we're there. We're on the two top peaks. Boom. We hit it today. I mean, this is huge. Okay? I brought this one here because this is our November low to our little correction before we plunged. Well, look at that. We hit that today. And then over here, as we were coming up from our 04 rally, this is our first falter here before we peaked out in 07. This is our first kind of major sell-off there, you know, in March of 07. And if you look down, we kind of had a little spike in volume there, see? So the seasoned investors seen that. See what I mean? How it broke through a major average and the volume spiked. See that? Look how it went up and tested it there, and it spiked a little bit again because you had sellers. See, they were like, I'm out. You know, they kind of looked like they made the wrong decision for 6 months, but then look. See, that's where I feel I'm at right now. Then look as it broke through the 50-day. Okay? Look at this. Just flat volume. Okay? And that's what's happening right now. You know, look at the volume here. Done. Okay? I like this trend line because it's our first falter. We came up and tapped it and then kind of muscled our way through. Top to top. Points right to here today too. A triple nut. You know, these stand. And I'm behind it. You know, if you're long, I hope you are scaling out right now. I don't want to tell you what to do. It's good to make your own decisions because you got to live with them. But boy, are they setting this up for a train wreck. And, you know, it's coming. You know, I love the comments. I love how we got no BS. You know, like on the Yahoo message boards. Keep them coming. And good luck.